It's midnight. The room is quiet, but your phone screen glows in the dark. You shouldn't check it, but you do. One tap and there it is, your portfolio. Red. Everywhere. Your chest tightens, your mind races. Should I sell now before it gets worse? Maybe buy more? Or just pray it flips green by morning? That moment, the restless urge to act, to do something, isn't about numbers. It's about psychology. So let me ask you, why is patience so hard in investing when it's the very thing that creates wealth? Today, we're going beyond FOMO. We're pulling back the curtain on the psychology of patient investing and how mastering it might just be the single greatest investment decision you'll ever make. Our brains were never built for long-term investing. They were built for survival. Thousands of years ago, the hunter who grabbed food now was more likely to live than the one who waited for a bigger catch later. That wiring never left us. Today, it shows up in the form of dopamine, the brain's reward chemical. Every time you score a quick win, whether it's hitting a trade, refreshing your portfolio, or even seeing likes on a post, you get that tiny dopamine surge. Feels good. Feels like progress. But here's the trap. The more you chase those quick hits, the more you reinforce the cycle of impatience. The illusion of control tricks you into thinking you're steering the market, when really the market is steering you. Now add culture to the mix. Social media floods us with screenshots of overnight millionaires, viral stories of the guy who turned $500 into $5 million, and hype trains shouting, "Don't miss out." Every post is a psychological landmine, pushing you toward short-term action, away from long-term discipline. It creates a false sense of urgency. If I don't act right now, I'll lose my chance forever. But history tells a very different story. Decades of data show that investors who jump in and out of the market, trying to time every swing, consistently underperform those who simply buy, hold, and wait. In fact, studies have revealed that missing just the 10 best days in the market over a 20-year span can cut your returns in half. That's the price of impatience. So let's use an illustration. Imagine you plant a tree. You water it, give it sunlight, and wait. But every day you dig it up to check if the roots are growing. What happens? You don't just stunt the tree, you kill it. That's what constant tinkering with investments does. Growth takes time. Compounding needs space. Patience is the soil. The battle with immediate gratification isn't just an investing problem, it's a human problem. And unless you learn how to quiet that craving for quick wins, the market will use your impatience against you. If the craving for instant gratification is the spark, then psychological barriers are the fuel that keeps impatience burning. These mental traps shape how we see the market, how we make decisions, and more often than not, how we sabotage ourselves. The first is confirmation bias. This is our tendency to look for evidence that supports what we already believe, while ignoring anything that challenges it. If you've bought into a stock, suddenly every headline about it looks like a signal of future greatness. And the red flags? You'll scroll right past them. It's not that the truth isn't out there. It's that we don't want to see it. We want reassurance, not reality. Then comes loss aversion, a psychological quirk that explains why losing $100 feels about twice as painful as gaining $100 feels good. This asymmetry drives panic selling at the worst possible times. It convinces investors to cling desperately to bad positions, just to avoid admitting defeat. In the market, fear of loss often outweighs hope of gain, and that's why so many people lock in losses instead of riding out volatility. The third barrier is the narrative fallacy, our brain's obsession with stories. We're natural storytellers, and randomness makes us uncomfortable. So when the market drops, we invent neat explanations. Oh, it must be because of interest rates. Or it's the Fed. It's the election. It's the news. Sometimes those stories are true, but many times they're just human attempts to impose order on chaos. The market doesn't always give reasons, it just moves. And here's the perfect illustration. Picture a gambler at a slot machine. They've lost 10 times in a row, but they lean forward, eyes fixed, whispering, "It's hot now. A win is coming." That's confirmation bias, loss aversion, and narrative fallacy all rolled into one. They're not playing against the machine anymore, they're playing against their own mind. Investors do the same thing. We tell ourselves stories to justify holding, selling, or buying. We twist facts until they soothe us. But in doing so, we let psychology, not strategy, run the show. If impatience is the default, then patience is the rebellion. In a world obsessed with speed, patience is the ultimate contrarian move. It doesn't just separate successful investors from the crowd. It defines them. At the heart of patience lies one of the most powerful forces in finance: compound interest. Albert Einstein supposedly called it the eighth wonder of the world. Here's why. Compounding turns time into a multiplier. Take a simple example: invest $10,000 at a 7% return. After 1 year, it's $10,700. Nothing exciting, right? But let it ride for 30 years, and that same $10,000 grows to over $76,000. No trading genius, no insider tip, just time doing the heavy lifting. And that's the secret most traders miss. The market doesn't reward activity. It rewards patience. The investors who resist the urge to jump in and out of trends, the ones who hold, who let compounding unfold, are the ones who consistently come out ahead. Think about the difference between value investing and trend chasing. Value investing is slow, deliberate, rooted in intrinsic worth. Trend chasing is frantic, emotional, and often short-lived. One is a marathon, the other a sprint into exhaustion. History is filled with examples of patient giants. Warren Buffett, who built his fortune not by flipping stocks, but by holding businesses for decades. John Bogle, who created index funds not to win today, but to win steadily over a lifetime. Charlie Munger, who famously said, "The big money is not in the buying and selling, but in the waiting." These aren't just investors, they're case studies in the radical power of patience. And here's the irony. In the age of instant everything, the patient investor is the real contrarian. While everyone else is frantically checking screens, chasing hype, and panicking at volatility, the patient investor does the hardest thing imaginable. Nothing. They wait. They trust the process. They let time become their ally. The contrarian power of patience is not about outsmarting the market. It's about outlasting it. So, how do you actually become a patient investor? Because let's be honest, telling yourself, "I'll be patient," doesn't work. Our brains are too wired for impulse. You don't fight psychology with willpower. You fight it with systems. The first step is automation. Set up your investments so they happen without you making the choice every month. Why? Because every time you stand at the fork in the road, invest or not, buy or sell, you invite emotion into the room. Automating removes temptation. It makes discipline the default. Next, you need long-term vision. And I don't just mean retirement someday. I mean a vivid picture of the life you're building. Where do you want to be 20, 30 years from now? What do you want your 70-year-old self to thank you for? That vision becomes your anchor, the thing that steadies you when markets swing and panic spreads. Then comes the review strategy. Patient investors don't obsess daily. They check in on their portfolio the way a gardener checks on a tree. Not every 5 minutes, but at healthy intervals. Once a quarter, twice a year. Just enough to prune if necessary, but not enough to rip the roots out. And finally, adopt mental models that reinforce patience. Think like a farmer, not a gambler. A farmer doesn't plant today and harvest tomorrow. They know the seasons, they wait for the right time, and they understand growth is invisible before it's inevitable. Investing is no different. Here's the truth. Building a patient investor mindset isn't about forcing yourself to ignore the noise. It's about designing your habits so the noise doesn't matter. It's about creating an environment where your only job is to wait. Because patience isn't passive. It's an active discipline. It's resilience dressed as stillness. And it's the most underrated skill in all of investing. Let's step away from the charts for a moment. Because patient investing isn't just about the money. It's about the life that patience creates. When you stop chasing every market swing, something surprising happens. Your stress levels drop. You're no longer riding the daily roller coaster of green candles and red crashes. The anxiety of "what if I lose it all tomorrow?" begins to fade. Instead of living in reaction mode, you start living in rhythm with the bigger picture. And then there's the gift of mental bandwidth. Think about how much energy is burned obsessing over trades, checking portfolios, and second-guessing decisions. When you embrace patience, that energy is freed. Suddenly, you have more room for creativity, for family, for passions that actually enrich your life beyond money. The market no longer owns your attention, you do. But the deepest dividend is peace of mind. Patient investing teaches you to trust time, to trust process, to trust yourself. It builds a discipline that spills over into other areas of life, health, relationships, even personal growth. Because once you see the power of compounding in your wealth, you start to notice it everywhere. In habits, in skills, in the quiet progress of a steady life. And here's the paradox. When you stop obsessing about returns, your returns often improve. When you stop trying to control the uncontrollable, you gain control where it truly matters: your mindset, your choices, your future. So yes, patient investing builds wealth. But more than that, it builds a lifestyle, a calmer, clearer, more intentional way of living. The numbers on the screen are just a byproduct. The real reward is freedom. So let's circle back to that late-night moment. The quiet room, the glowing screen, the portfolio in red. That feeling you had? That restless urge to do something? That's the test. That's the battlefield. Because the truth is this: markets don't just test your money, they test your mind. They tempt you with hype, they punish you with fear, they lure you into chasing stories. But the investors who win, really win, are the ones who master patience. We've seen how our brains crave quick rewards. We've unmasked the biases that cloud our judgment. We've walked through the power of compounding, the systems that keep us steady, and the lifestyle benefits that come from letting time do its work. And all of it points to one simple truth: patience isn't weakness. It's strength. It's the discipline that separates fleeting gains from lasting wealth. So here's the question I'll leave you with. When your future self looks back, 10, 20, 30 years from now, will they thank you for chasing every swing, every hype cycle, every fear-driven decision? Or will they thank you for standing still, for trusting time, for giving patience the chance to pay you back 100-fold? The market doesn't reward the fastest. It rewards the most disciplined. And in that sense, patient investing isn't just a strategy. It's a way of life.